Hello everyone. Welcome to our weekly financial markets recap. After a very bullish April, we experienced a rotation day on Monday. The rest of the week was a period of stabilization, culminating in a strong close on Friday driven by the technology sector and better than expected employment data. Let's break it all down. As I mentioned, Monday was a clear day of rotation, sell America, buy Asia. While Wall Street and European markets declined, Asian markets shined, particularly South Korea, Kospi, and Japan. This was primarily attributed to tensions in the Strait of Hormuz and a sense of exhaustion following the strong gains seen in April. Starting Tuesday, the market stabilized, and by Friday, it closed strongly once again, led by the technology sector. According to my Market Health Index, the weekly close stood at 4.32. This indicates a healthy market with a positive bias, though one that still retains a degree of caution. First quarter earnings results remain solid. 84% of S&P 500 companies have beaten earnings per share expectations. In the technology sector, the standouts included AMD, showing strong weekly momentum. Datadog, rallying after posting solid figures. Intel, continuing its strong run. On the downside, some companies such as Arista Networks and Mercado Libre saw mixed market reactions despite reporting strong results. This demonstrates that the market is currently demanding when it comes to future guidance. The most significant economic release of the week was the U.S. employment report. 115,000 jobs were created, exceeding expectations. The unemployment rate remains stable at 4.3%. This reinforces the resilience of the U.S. economy, though it also dampens expectations for rapid interest rate cuts by the Fed. In summary, the market appears healthy, with clear leadership from the technology and AI sectors. However, the war in the Middle East has not yet ended and remains the primary risk. Despite the current landscape where investors could adopt a moderately offensive stance and capitalize on equities, particularly in leading sectors such as technology and AI, semiconductors and software development, finance, regional banks, and small caps, I recommend keeping a close watch on geopolitics. Should the need arise, be prepared to shift to defensive assets, gold, 10-year treasury bonds, utilities, such as electricity providers, consumer staples, and the Japanese yen, to name a few. Although the conflict in the Middle East has not yet demonstrated the capacity to trigger systemic risk, and the economy appears quite robust, I would nonetheless recommend reinforcing market positions based on concrete, solid earnings results. What are your expectations for the coming week? Let me know in the comments below. If you enjoyed this video, please give it a like, subscribe, and hit bell.